I think it's unlikely that the Bank of Canada will raise its interest rate during 2013. The economy grew very slowly last year, and the basis for a recovery in 2013 is fairly tenuous. It would require a very strong recovery in China, which I'm not expecting, and with that, strong commodity prices. So I think it's likely that the Bank of Canada will keep its interest rate low in order to support growth. But having said that, the key thing that they've done over the past few years is to tighten the what we call macroprudential controls on mortgage lending. Now, there are many countries in the world where interest rates are very much affected by the interest rates in the United States, and that tends to keep rates rather low, lower perhaps than is good for those economies. So the way of dealing with that is that those countries have employed credit controls to limit the amount of mortgages or business loans that banks can make, even at low interest rates. And if any kind of tightening is required, I would expect a further tightening of that kind. Canada has already tightened 3 times in that respect, and there could be a fourth if required, but it's not clear that it would be required. But they would likely do that, I think, before raising interest rates. The reason the Canadian economy grew slowly in 2012 is that Canada is very export dependent, and the Chinese economy was slowing and the US economy continued to grow at a subpar rate. So both of those two factors acted as a drag on GDP growth. I don't expect a sudden surging recovery from either China or the US in 2013, and therefore the knock-on effects on demand for Canadian goods or commodities is going to be quite limited. So I would expect a gradual and small recovery at best, certainly not a strong recovery. In the meantime, there are risks from the over-leveraging of consumers, from the housing sector, and from some degree of loss of competitiveness in Canada. So all of those things also will tend to keep growth down. So I suspect that we will have another year of rather disappointing growth. Over the medium term, the drivers for the loonie have been strong commodity prices and the safe haven aspect of Canada's economy. I think there's no doubt Canada will continue to be a safe haven, but there are some risks, particularly around personal household debt and the housing sector. There's also a risk that commodity prices will continue to be soft through 2013. All those things suggest to me that both in the short and medium term we should not expect the Canadian dollar to strengthen against the US dollar. On the contrary, I think it could weaken some.